Why don't we move on to the economy? Let's talk about consumer sentiment, which is not very good right now. Let's put this up there on the screen. Came out a couple of days ago. It was absolutely, it was actually kind of missed. We weren't able to cover it in the last couple of days, but there's a University of Michigan survey, which is very closely watched, which looks at consumer sentiment. Now, what is consumer sentiment? That's actually a very important question. The way that consumer sentiment is basically defined is your want and think about how you're going to spend money and how you're feeling about the economy. So it is a subjective thing, but overall actually has a pretty good track record about people's subjective view of the economy that can then obviously have a lot of impacts going into retail. So the University of Michigan Consumer Sentiment Survey showed an 11% decline in mid-March from 60 to 57.9 from 64.7 the last month. Quote, a downward trend that has taken hold since office. That is the single lowest level since November of 2022 when inflation was rampant. And compared with just 1 year earlier, it is down some 27%. So a nearly third drop in overall consumer sentiment. Now, why does that matter? Because consumer economy spending is 70% of our economy. We'll put the next one up there on the screen. The long-term inflation view within that consumer sentiment also jumped the most since 1993, meaning that people's feeling that inflation will continue for the foreseeable future has had such a precipitous incline. That, I thought, more than the consumer sentiment, was the biggest headline. It's not only that people have bad consumer sentiment in their want to spend money in the overall economy, they also believe that right now, that inflation will be higher in the future. Now, when you do that, all kinds of downstream effects. People hoard cash. People, or even worse, for our economy, they just don't spend any money. Or they think that because their bills and all that are gonna go up, they basically lock it in place. And if you don't spend money, if money's not being spread around, then everybody's overall income is beginning to go down in the aggregate. And we're gonna watch stocks go down, retail businesses collapse, vacation, etc. And probably the worst outcome is that the only group that's not gonna pare back consumer spending is rich people. So we will only increase the pyramid function that we already have in the economy right now. So overall, it's not a good trend. And this is the piercing heart of, this will pierce the heart of any successful Trump administration. You can overcome a lot, but you cannot overcome a bad economy as Joe Biden did, especially not, we're gonna talk about Social Security and all that stuff in the future. If people feel like their services are getting cut and stuff is gonna get more expensive, you're done. I mean, put midterms and all of that aside, just in terms of a political movement and strategy, you will lead yourself down the George W. Bush path of destruction of legacy, administration, and put yourself in the wilderness for a decade, just like they did.
Very possible. Very possible.
I mean, that seems to be like what they want to do. I don't really understand any of it.
I mean, there's a theory that they want a crisis. Because a crisis, again, what do presidents do in a crisis? They are able to claim more powers and, assert more authority. So, as you see these things that you're like, this is insane. I mean, especially around the economy, you're like, this is insane. It feels like you were trying to trigger a stock market crash and a recession, et cetera. There's the theory that, first of all, recession, who comes out on top? As you said, the only people who don't really suffer are ultimately the richest. And when everything crashes and prices are at rock bottom, we saw this with COVID, we saw this with the financial crash, we saw this even out of the dot-com bubble, the richest are able to buy up more assets, and then they're the ones who are able to benefit on the other side. Even with the DOGE cuts on the National Weather Service, the FAA going after Social Security, all these things that could also precipitate either mass public resistance or some sort of an active crisis. Again, those are times when presidents are able to claim more power. So that is one thought that is out there, is that, to your point about it feels like they want this. One theory is that they do. Now, I don't know if that's true or not, but that is one theory that is out there. Just to go back to the economic numbers here and why, when you look at these, consumer sentiment, what do they expect about inflation? Why does that matter? Part of the reason that there was so much difficulty getting inflation under control in the 70s was because of consumer expectations of inflation. So it had a self-fulfilling aspect to it. Once people thought prices are going to go up, then for one thing, you get, corporations like we saw coming out of COVID that are like, oh, well, people think prices are going to go up, so I can get away with hiking prices. That was actually a big part. The greedflation was a big part of the inflation, not 100%, but a significant chunk coming out of the COVID crisis. But it becomes a self-fulfilling prophecy. Not to mention retailers, many of whom Target reported soft sales. Big Lots, Forever 21 actually filed for bankruptcy. I think this is their second time filing for bankruptcy. Bed Bath, a bunch of retailers have been warning that their sales are soft and are seeing a pullback from consumers already. And then when you layer on top of that, they're watching these indexes very closely to determine how much stock are we going to buy, how many people are we going to hire, how many people are we going to lay off. All those sorts of things are based on these types of metrics and expectations of what consumers feel now and what they're likely to do in the future. So that's why when you see these metrics, it's not just about like, oh, how's Billy feeling about shopping this week? How's his sentiment? It has a real impact in terms of the way that business reacts in the immediate term, and can then, like I said, have a self-fulfilling prophecy aspect to it, especially at a time when the White House's economic policy is, we'll just call it chaotic, okay? If there's a plan, no one can figure out what the hell it is. It's all over the place. You've got mass austerity in the government, but meanwhile a tariff policy, which if a tariff policy is gonna be effective, you actually need government spending, industrial policy, investment, et cetera. The tariff policy's on, it's off, it's here, it's there, it's coming in April, it's back again, it's all over the map. So there's no clear direction there either. And then you also have, coming down the pike, the reconciliation bill and what all of that is going to mean. You've got these cuts happening at the government level, which really do reverberate in a way that I don't know that people have fully anticipated. You see already universities pulling back in terms of their spending and hiring. You see healthcare pullbacks in terms of their spending and hiring because of the cuts and the threats of those cuts to come. So all around, there are a lot of giant red flags and warning signs, even as, the stock market did better this week. I don't know, the markets, I think right now it's 927.
It's not bad.
Yeah, stock futures have edged down. We'll see what happens for the rest of this week. But there is still a lot to be very concerned about at this point.
Yeah, let's play Secretary Treasury Scott Bessent. He was asked about the market crash. Let's take a listen.
Let's talk about what happened in the stock market this week. Worst week for the market in 2 years. Does that worry you, Mr. Secretary?
Not at all. I've been in the investment business for 35 years, and I can tell you that corrections are healthy. They're normal. What's not healthy is straight up that you get these euphoric markets. That's how you get a financial crisis. It would have been much healthier if someone had put the brakes on in 06, 07. We wouldn't have had the problems in 08. So I'm not worried.
Well, okay. It's one of those where, look, it's bad optics. I'm not even saying, it's funny, I like Bessent. I like a lot of the stuff that he says. And if it was just somebody like him and it was a total, a government approach, which was tariff, and it was studied, and he was also out there saying, the American dream, he keeps saying this, the American dream is not flat screen TV. I totally agree on all of this. But when it's coupled with literal just madness and chaos that is back and forth, obviously no real plan at all, then you're getting into territory where people are like, no, well, if all I've got going for me is a flat screen TV, then yeah, and you're gonna try and make that more expensive and not sell me on some big, broader plan, you're gonna find yourself in real trouble having not billionaire, I don't know what he is, some several hundred millionaire, Secretary of the Treasury, basically trying to lecture consumers and downplaying a stock market return. That's how it's just simply going to come off. Even though I agree with the guy on a lot of things that he says, but just generally.
He's a mere 500 million.
Yeah, 500 million.
He's poor in the context of this administration.
He is poor, that's right, he's a poor man. Yeah, it's just bad optics over and over again, and I don't think that it's being received in the way that they want. I mean, stuff like that. Imagine, if you probably agree, maybe. I think a lot of people agree, the whole flat screen thing and all of that. But you gotta feel as if your country's getting a whole lot better, and you yourself, in the immediate and in the long term, are buying in to a real plan that's gonna change overall in the future. The chaos, when you're also making stuff more expensive and nuking consumer sentiment and the stock market in the immediate term, you're just making it so that people are more stressed out in their day-to-day life, and people hate that, and they should.
I think it was Arnaud who made this point on Twitter about like, yeah, I mean, he's not, to your point, he's not wrong.
Yeah, he's right.
That if you have, our economy is way over financialized. It is almost certainly, these tech stocks are almost certainly overvalued in anticipation of AI. I mean, Tesla stock has been wildly overvalued, just come back to earth a little bit, but it's still, we likely are in a giant sort of everything bubble. And if you look at an analogous situation, we actually covered here on the show how China intentionally let the air out of its real estate development bubble, and did that because they wanted to focus financial resources in other parts of their economy. So they had a priority to, maintain their manufacturing industrial base. Also, we're going to talk probably on Thursday about the way they have just technologically developed at an astronomical pace. Now they have, BYD has an EV that can charge almost 300 miles in 5 minutes. Like, that is astonishing. And so they wanted the tech investment, they wanted the, to maintain the industrial base. So they intentionally let the air out of this giant real estate bubble. But it was done in a planned and concerted fashion. If you're just causing a stock market crash and a recession, but there's no here's how we're gonna build back better on the other side, then you're just causing pain. That's it. You're taking from people what has been created as the American dream. We've had decades that have been directed towards making this a consumer-driven economy, where basically what you get, instead of having a vibrant factory in your town and middle-class union jobs, et cetera, is this flat screen TV. If you're going to take that away from people and you're not going to offer anything else, and on the contrary, you're cutting their Social Security and you're cutting their Medicaid, et cetera, then yeah, that's not going to be a plan or a program that anyone signs up for, especially when it's being sold by a bunch of billionaires and a mere 500 millionaire in this particular case.
Bingo. Yep, that's the issue. Let's put D5 up there on the screen. This is U.S. shoppers cutting spending as their economic outlook concerns mount. This goes exactly to the same problem. And overall, if we have inflation, tariff on, off, changes to people's retirement status quo, possible cuts to services, or at least the appearance of cuts to services. One thing, I remember talking about this with Biden, sometimes the facts don't actually matter. And yes, I know that that's disconcerting. A lot of consumer sentiment, stock market and all that stuff, it's bullshit. It's just feeling. You need to feel confident. People feel confident, they change. Everybody knows that. Think about your own life. Well, if people feel as if there's chaos, that will just have downstream effects that feed more into a bad market. So even if the reality and all that doesn't change, it won't even matter in some cases if people feel as if you're going in the wrong direction. This consistently happened under Biden, liberal economists and all that. We're like, actually, everything is fine. It's like, that's literally never worked in all of history. Same thing here, trying to sell a false vision of what people feel never works out politically.
There's also just big structural, the cost of living crisis is incredibly real. And it was real before inflation hit. I mean, the cost of healthcare, housing, and education has been skyrocketing for decades, vastly outpacing any wage gains that the American public, minimal wage gains that the American public has experienced over the past, let's say, 30 to 40 years. And so, it really has reached a point where so many people, housing is just an unbelievable burden. Rent is so incredibly high. And so, the, little bit of this or that they did, or the unemployment rate being low, whatever metrics that they're pointing to, it's like, you don't get it. I am still struggling. And the price increases, the inflation that came, in the wake of COVID for a variety of reasons and was not dealt with effectively by the Biden administration, just pushed people past the brink. So, all of those things are incredibly real and not well captured by some of the macroeconomic indices. But, there's, again, if the Trump administration was like, here's how we're going to deal with that. And, yes, there's going to be rebalancing, but we're going to make sure you're going to be able to afford a home. And here's the plan. And here's how we're bringing down the cost of education, et cetera. And here's how we're going to get you health care. But on the contrary, the minimal reforms that were made by the Biden administration to try to bring down drug prices, for example, some of those have been rolled back by the Trump administration. So they're, if anything, going in the opposite direction on those key pieces that I still think are like the major drivers of economic discontent. And then they're just layering on top of that extra chaos.
Playing with fire. Hey, if you like that video, hit the like button or leave a comment below. It really helps get the show to more people.
And if you'd like to get the full show ad-free and in your inbox every morning, you can sign up at breakingpoints.com.
That's right. Get the full show, help support the future of independent media at breakingpoints.com.